Insurance. So insurance, your first line of defense. Actually, insurance has to be your first line of defense, and if it is not defended properly, then it can erode your wealth, which is accumulated for a long time. And everybody is supposed to have insurance, and there are like various insurances, and there are like various confusions that revolves around it. And in this webinar, we'll be covering and we'll be unmasking, each one of it. And yeah,
Hi everyone. So, hope I'm audible. So today we know that insurance is a need of the hour. So everyone is worried whether they have enough insurance in case of emergency, and a lot of people around us are also encountering uncertainties, and especially after COVID. We came to know that India is the house of diabetic. A lot of diabetes cases are increasing in India, and I think it's the best time for us to know more about insurance, to take informed decision, and to get ourselves and our family an insurance policy. So I know that there will be a lot of questions and queries from your end, and that is at the end. So please have it ready. And so for the next 30 minutes, this will be the agenda for the meeting. So it's myths about the insurance. What is insurance? And why do you need insurance? What are the different types of insurance policy that is available in the market? And what do you need to check before you get an insurance plan for you and your family? So this will be the agenda. So the first and foremost myth that when comes to insurance is that young and healthy people don't need insurance, right? So basically, when we are young, we are not often going to hospitals. We are at the peak of good health. So we believe that why we need insurance when why do we need to pay premium when we are in good health? But however, we need insurance only when we are in good health. So it's a right time to buy the policy when we are in good health in terms of health. So and we know that in when it comes to term insurance, we know that the premiums are very low, very cheaper at the younger age. So it's better to buy a term or life insurance at a younger age. But when it comes to health, then this myth plays an important role in our decision, right? So, but we need to look at three important factors, to debunking this myth. So the first one is why we need health insurance is we know that we have to prepare for unexpected things in our life. So we people meet with accident when they least expected. When they least expected, they need a lot of money to take care of the medical expenses. So in that case, here comes one feature that we need to look on is the out of pocket expenses. That's what the economists say. So out of pocket expenses is something that you incur out of your pocket, the expenses that you incur out of your pocket, and it is not covered under any social protection scheme. So the money you are spending in the hospitals is going out of your pocket directly to the hospital. So, and we know that for sure, nearly 62% of the total medical expenses is basically out of pocket expenses. So, at the same time, 82% of Indian urban households don't have an health insurance. So, you know how they are spending for hospitals and bills and everything. So, basically, 55% of it comes from your own savings, the amount you save, and it directly goes towards your hospital spending. And 33% of it is basically from borrowings. So you borrow money to fund or to take care of medical expenses. So this is the case right now, and OOP is always higher in case of Indian scenario. So this is the one we need to look at when we are saying young and healthy people don't need insurance. And the second thing is lesser exclusion period. So when it comes to health insurance, there is something we need to look at. One is pre-existing disease waiting period and specific illness waiting period. So these two are basically 2 to 3 years. It will range between 2 to 3 years. And you have to wait till the 2 to 3 years time, and then only you can make the claim. So in that case, to enjoy full-fledged insurance cover, you definitely need to buy an insurance when you are healthy and when you are at your young age. So then comes the second myth. Life and health insurance through my employer is sufficient. And here we have to look at that. It's very good that you are covered by your company, by your employer, but we need to look at few things. Why we need a cover other than employer provided cover. So the first thing comes your employment status. So now that you are in the company, you are covered by the policy. However, in case if in future the day you quit, the policy gets terminated. And let's assume that you are in a sabbatical period or you are quitting your job now and looking for any other job. In that period, you and your family will not be covered under any policy. So, as I said earlier, things happen when we expect it at the least, right? So when something happens that time, you will not be covered and you have to incur the, that medical cost. And the second thing is employer provided health insurance. Employer can, terminate it anytime they want. So for example, you should understand that it is just another perk, but it is not mandatory by the employer to provide you a cover. So if they want to, cut the cost, and if they don't want to provide a policy, then you don't have any other policy to cover your medical cost. And the third thing is you don't have any customized options. For example, what is covered and what is not covered in case of critical illness, in case of terminal illness, will be decided between the company and the provider, and we don't have any say on that. In that case, when it comes to any critical illness, maybe we are undercovered, maybe we are not covered at all. So this is the second myth about health and term. And now we comes to third and the most common one. Insurance is for investment purpose. So we have to, when we look upon insurance, it's more or less similar to investment, right? And we think that way. But however, most of us believe, why should I pay for a term policy, a pure term policy, when I'm not getting any benefit out of it? So and most of the Indian mindset is that we need something out of it, some benefit out of it. So, but where this insurance and investment differs is basically when it comes to liquidity and when it comes to cost. So in case of liquidity, whenever you are going for mutual funds or stocks or any other financial instruments as such, we always look at the liquidity. So it is readily available. End of the day, it's your cash, right? So you can take it whenever you need it. However, when it comes to all other insurance policies out there, it's not like that. When you consider it as an investment option, you don't have a liquid option anytime you need it. You can't take the money out in case of ULIP policies or endowment as such. And also, for example, I'm saying like if you take a 24-year-old and a 1 crore term insurance will just cost him a 10,000 bucks yearly. But when you look at an endowment policy, a 10 lakh endowment policy will cost him 1 lakh premium. So while we are making investment decisions or anything, we always look at the opportunity cost, right? So here, instead of giving that 1 lakh and basically that investment option is illiquid. So instead of that, you can just go for a term insurance policy, and then the remaining amount can be directed towards, the financial instruments that give more returns and which is, very particular for you. So you can opt for that also. So that is the third myth. And then comes life insurance for saving taxes. So I'm not saying that we don't, have to save, it's not necessary to save taxes. Definitely we should save tax. But using life insurance as an option, basically, when you take life insurance just to save tax, the focus is not right. Definitely, buying a life insurance to it or incidental towards saving taxes, but it should not be the primary focus. So that is also you have a lot of other alternate options when it comes to saving taxes. For example, PPF, you have ELSS funds, you have SSY. So these kind of other financial options are also available. And uh, you should understand that insurance is a long-term commitment. So it's not like you are buying it this year and you pay the premium. Most of us prefer payments, right? We cannot afford to pay it in a single go most of the times. So in that case, you cannot consider it as a saving. It is for not for saving taxes, because you can say that. So say an individual wants to buy a house 2 or 3 years later and he wants to go for home loan. So what he can do now, like he has an option to go for loan principal repayment, home loan principal repayment option. He can claim that in ATC. Then he can pay a lot for the premium and just showing it to claim the tax. So this is one of the common myth. And the fifth one is I don't need insurance once my children are adults. So with the common Indian mindset that once the children are adults, they'll take care of us. Yeah, that's true and that's good. But reality might be contradicting. So we don't know what is there for sure, right? And here we need to look at two things. The first one is when your spouse is still dependent on you on for income purpose. And also when you still have a debt burden in your shoulder. So this two things we need to consider while we're thinking about this, like I don't need an insurance when my children's become adults. And the last one is I have a comfortable amount of savings, so I don't need insurance. Yes, I understand that you save a lot of money, you put it in funds, you create wealth. However, we need to understand whether comfortable is equal to adequate. Yeah, you may be having comfortable savings, but you that will not be adequate enough to meet all the expenses if you are not there in future or if you are gone. So in that case, you should understand that there is something like cost of death, for example, is equal to loss of income plus opportunity cost. While the loss of income says that, when you are gone, there are so many expenses like household expense and debt repayment, all this burden comes to your family. But at the same time, there is some opportunity cost there. That is, if you are alive, if the breadwinner is alive, his children might get into a very they can afford a very quality education. So these are all some of the quality things that they may miss out if you are not there. So that is the reason we are always saying that savings is there, but you should make sure that they are adequate enough so that you don't need insurance. So, and with rising medical cost and inflation, so we need to look at whether we are having right insurance cover, adequate insurance cover to take care of the family when we are not there. So we debunk most of the myths that comes to our mind. So now it's the time to understand what is insurance. So insurance is a risk mitigation tool, risk management tool, which will cover yourself and your family during an uncertainty. And also, we need to look at, so for example, if you buy an insurance, so these are all the features that you need to look into the policy document. Their policy number should be there, what is covered. So basically, what are all the illnesses that are covered? Maybe you will be having riders such as critical illness rider, personal accident rider, whether they are all properly covered. And then the tenure of the cover, how many years you are going to opt in for the term policy, so that needs to be there, and the premium amount will be there. And there comes the terms and conditions, so wherein the most of the insurance jargons will be there, which will be very hard for us to understand. But with right insurance advisors, you will be able to find out which policy suits you the most. And please understand that insurance is not a common thing. It's different for different individuals, given different circumstances, and your requirements will be different from others. So it's always better to go for a insurance advisors or insurance specialist who can give you a customized solution. And moving on further, I'll give it over to Swagat.
Okay, hope I'm audible now. Why do you need insurance? So this is one example, right, where Ram, a 40-year-old, worked for a tech company, and these are circumstances where he has a child and his wife was a homemaker. And he also has a aged parents who were diabetic and had hypertension. So now the problem is Ram suddenly passes away in a road accident last month, and his wife and family are now stranded without income as Ram didn't insure himself. So the question is, what type of insurance, if Ram had taken, then all this would have come to a proper solution. And it is basically a proper life insurance. And proper life insurance means it is a proper term life insurance. And had he taken a proper term life insurance, which is in alignment with his income, his expense, his retirement age, his loan commitments, his asset values, his existing details, and all that, and especially his lifestyle and medical conditions, his family history, and all that, then he would have taken an adequate term insurance cover with any of the insurance companies, and he would have basically solved all of this problem. Which is, first, he has a child, right? And he would have basically all that expenses which he brings into the term life insurance. While taking it, he would have addressed the first thing, which is his child's education. He would have definitely addressed it had he taken a proper life insurance, because this life insurance acts as an income replacement. And had he taken a proper life insurance, then he would have addressed this query of his children education. And secondly, his wife was a homemaker, so which means that she's not a earning person. So, and he is the only breadwinner of the family, which is a very crucial thing, because again, a proper life insurance would have settled his family with a value which his wife will be able to carry forward for the next few years, say 20 years or 25 years, to run and sustain the family, right? So since he didn't have a life insurance, he didn't have a proper term insurance, he couldn't address any of this, and his family is left stranded without income. So this is why we need a life insurance, especially a salaried person, especially if he is the only income earning member of the family, right? So investing in his family is one of the most important things that he needs to do, because obviously everybody, we invest in ourselves, which is by taking a proper education and coming to employment and all that. But investing in our family means taking a proper life insurance, taking a proper health insurance, which is very important, because there comes the next part, which is investing in wealth creation, which is the third part, which is the later part. But when you're able to address the first two things, which is a basic requirement, right, then the third thing is taken care automatically. What does insurance provide? So it, first point is, Insurance empowers you to be independent and face challenges. So in this case, independent means that a good insurance coverage can act as a good income replacement, as we see, as we saw in the previous slide. So it makes you independent. It makes so because you have a good coverage, so you can take the thought of covering yourself more because you're adequately insured, and you can basically carry on with your own work. So it makes you feel independent, and then face challenges. That means that in case of any claim, right? Since we have taken a good insurance, good coverage, a perfect coverage, and we have covered everybody in the family, right? It allows you to face challenges, which means that it doesn't make you worry about finances, right? So because if the details are right, if everything goes perfect, he doesn't have to worry about the claim because his policy will take care of the claim. So in that way, it makes him ready to face challenges. So that's a very important point. Second is lessen your financial worries due to unforeseen circumstances. Again, as I addressed in the previous point, since you have a good coverage, most of the part, which means that say 90 to 95%, which is in the case of a health insurance, 90 to 95% of the amount is paid by the insurance company itself. So what is not covered is the non-medical items like your cotton, band-aid, syringe, all those petty expenses, right? Which comes under the category of non-medical items. And that is what you will be basically paying out of, which is say 1,000 or 2,000 out of a 1 lakh bill. So it basically lessens your financial worries since 95% of the claim is taken care by the insurance company. Third is access a support for your family to get back on track without hitches. Okay, this is a very important point, and this comes in the case of a life insurance. So, as we saw in the previous slide, had Ram taken a proper life insurance, then that acts as an income replacement, and that would have supported his family in case of his absence. And so that's why it acts as a support to your family in your absence. Had you been there, then there is no problem. But since that person is not there, then that comes a problem. And at least a life insurance, you know, tries to support the family financially. Next comes the fourth point, which is enables you to spend more time working on your goals and less on worrying. So again, this is as I told you, there are like three investments one can make in their life. One is investing on their education, and then investing on their family well-being, and third is investing on their investments, that is wealth creation, which is so once you're settled, once you have a good policy, once you're sorted with your insurance details and insurance uh, coverages, then you can focus on creating wealth, or you can focus on other goals which you want to pursue in life. So insurance basically helps you to keep track of everything. So as I told you, it makes you independent, it makes you face challenges, it lessens your financial burden, it supports your family, and then it allows you to spend time on your goals rather than worrying about something which is something uncertain in the future. Okay, next is a difference between life insurance and health insurance, and I'm just covering a basic thing. So life insurance is something that I take, to cover my family in case of my absence. And there are like various life insurances policies which will be covered in the coming slides and the next slides. But that's what is life insurance, and life insurance is one of the best tools, to manage risk, to mitigate risk, and that really solves the purpose of taking managing risk. Say, for example, a person with a person. So generally, we are advised to wear helmet while riding, right? So the point is basically. Sorry, I went out of uh, line by mistake. Okay, so I was saying that say a case of example where everybody we take the help of helmet while riding a bicycle or something, and it's basically to cover the head or the most crucial area, that is that is covering the head. So insurance is something like that, where the helmet basically, it doesn't prevent the accident from happening, occurring, but it prevents the, more damage to the person. Likewise, life insurance, yes, it doesn't prevent the life insurance doesn't prevent the uncertainty from happening, but it prevents or at least it prevents damage, or it basically lessens the damage, and that's the whole point of taking life insurance. And next is health insurance. Health insurance, again, most of us know, and most of us have health insurance also. But then the point is, taking a health insurance matters a lot, and taking it at a younger age matters a lot, because that is a policy you're going to continue till your life, say 90 years or 95 years, and that is a policy you're going to keep renewing every year, right? So taking it at a younger age makes more sense, because at young age you are very healthy, you are hale and healthy, you are fit, and that is the age you can look at to take a health insurance, because after a certain period, health insurance imposes many conditions that they won't cover this, they won't cover that, and all that. So taking it at a younger age, especially when you're fit, becomes more sense. As you old, there are certain things they will not cover. So once you take it at a younger age, and once there is some uncertainty, then health insurance will cover that. So that's the point of taking health insurance at a very younger age. Next is critical illness insurance. So there are certain illnesses like, which is a very chronic illnesses, like cancer, heart cover, kidney failure. So all that will come under Alzheimer's, Parkinson's. All that will come under a chronic illness, and occurrence of that almost results in a loss to the family. So taking a critical illness cover is basically ensuring against those illnesses, so that in case of any uncertainty, the family receives that amount, or even that person receives that amount, and he can basically use it for the treatment. Next is types of insurance policies. First is life insurance. There are basically two categories: life insurance and general insurance. First category is life insurance, and under life insurance you have four life insurance policies. And first is term life insurance policy. So term life insurance policy is the pure insurance policy, pure life insurance policy, because the whole point of taking a life insurance is to insure and cover the family in case of the uncertainty of that person for becoming absent. So now this is the only insurance which covers at a very affordable cost. Say for example, I am a 30-year-old guy, and my annual income is close to 10 lakh, for example, and I'm going to work for next 30 years, which is still 60. Then I'm supposed to take at least a difference of say, or a coverage of say 1 to 1.5 crores, and my annual premium would come around 10 to 15,000 yearly. So the reason it's because it's very affordable is because that is the risk we are exposed to at this point of time, and this premium stays same, or it remains same throughout the policy period. So it is also good to take at a younger age. At the same time, it is also good to take when you have so much responsibilities towards your family. So that's term life insurance. Second is endowment insurance. Endowment insurance is basically a combination of life insurance and savings, which means that, as Archana quoted, for a 10 lakh endowment value, we will be paying a premium of 1 lakh, say for 10 years. So that will be a premium for endowment, because it covers, it basically has two aspects, right? One is life insurance, and then one is savings. So a part of the premium goes to life insurance, and part of the premium goes to savings component. So say if the person meets with some uncertainty, and the family loses him, then the family receives a 10 lakh value. And if not, then in the maturity, the person will receive 10 lakh plus some bonuses. So that's the endowment concept. So which means that if the person outlives that maturity a year, then he receives something from the insurance company. So that's called endowment policy. Next is money back policy. So this is also kind of an endowment policy, where instead of receiving money at maturity, here in this policy, the person receives money at frequent intervals. So this is also a type of endowment policy, as I said. Next is ULIP policy. So many of us would have come across this term ULIP, especially your bank is selling this policy to you. So ULIP is the combination of life insurance plus investments. So ULIP is a combination of life insurance plus investments. Here again, the difference between endowment and ULIP is that in endowment, it's basically a savings component, whereas in ULIP, it is basically a investment component. So a part of the money is invested in equity mutual funds, and a part of money is invested in life insurance. So upon happening of a certain uncertain or unforeseen event, the family receives some money from the life insurance, and if at all the person outlives that time period, then he receives the money from the ULIP policy. So now the drawback or disadvantage is that in ULIP, you have a lock-in period of 5 years at least, and liquidity is the main problem. And second main problem in ULIP is that it's very expensive. And third is due to less transparency in the policy. This is one of the missold products in India, especially in India. Coming to general insurance area, sorry. Coming to general insurance area, sorry about that again. Hope I'm audible now again. Coming to general insurance area, we have five common policies, which is the health insurance, which most of us are aware. Next is the professional indemnity insurance. So this professional indemnity insurance is something that is taken by professionals like CAs, chartered accountants, and architects, lawyers, and independent consultants. So the main usage or main need of this policy is that say we are providing a service to a customer, and in case of some negligence or some error, and the customer who faces some damage or loss, then this policy will save the professional from being this policy pays to the professional, and this basically settles the claim and all that. So this is the main purpose of taking a professional indemnity insurance. And as I said, this is mainly for professionals like chartered accountants, lawyers, and architects. And then next is vehicle insurance. All of us will have vehicle insurance, and this is something mandated by government. And vehicle insurance has two category, which is own damage and then third party. Own damage is something that you take for your vehicle, and third party insurance is something you take for other vehicle. And that's how the claim is settled in case of some occurrence of an accident or damage to the other party. Next is travel insurance. So this is one of the most important or most underrated insurances, if I have to say, which because we all know what is health insurance, but travel insurance is basically international health insurance. Say, for example, somebody travels to abroad, then what would they do? And many countries demand health insurance or insurance for their cost to be covered in that country. So what someone will do if they don't have insurance, or we surely don't know how much the insurance will the cost will come to. So travel insurance is nothing but a international health insurance, which means that a health insurance will cover only in India within the boundaries of India. But a travel insurance, it's basically a customized product where you can choose your country of travel, you can choose the dates, you can basically and the things that it will cover is loss of passport, loss of baggage, or anything, any medical expenses that is required to be done in that country, or any surgery for that matter. All that expenses will be covered by travel insurance itself, and the premium is very nominal. For example, say someone takes the coverage of 5 lakh dollars, then the premium will come around say 3,000 to 4,000 for that travel. This is approximate value I'm saying. And next is home insurance. Home insurance is also called as fire insurance, which means that I have building, I have a construction, and again, a home will have two things, which is a land and then a structure on top of it, right? So land is definitely nobody can damage or cover a land, but then home can be covered, which is basically the structure. And in case of any damage due to any natural calamity or due to fire, then this insurance will pay off that. So I'm just going to cover available life insurance products in India or in general. So, which is first is whole life insurance. This is one category of life insurance which is taken till the age of 99. So this might sound very fascinating, but the problem in this is that say somebody takes a 2 crore whole life insurance, it is something like a guaranteed amount to that family. But the problem is when you adjust inflation, when you take the concept of time value of money, which is very common in finance, then this policy means it does not make sense at all. It is not a very great policy. Instead, what you can do is you can start investing or start creating a corpus for yourself for separate goals. So taking a whole life insurance will not it's not going to be a great idea. So, but the whole point of having these insurances to at least make awareness that this type of product is also available in the market. So if somebody is not very comfortable with the life insurance or a proper term insurance, they can at least take a whole life insurance so that at least some guaranteed amount will come to the family is the concept here. Next is the second type of life insurance is endowment insurance. And as we saw in the previous slide, endowment is the product or it's a combination of life insurance plus savings. So if you see here, the person takes at the age of 30, which is a common age to take the endowment product, takes at the age of 30 and then he withdraws the money at the age of 50. So it's for a limited time period, say 10 years or 15 years. And the whole point is that if nothing happens to the person, at least the saving component is what he gets as a return. So that's the concept. Somebody takes the endowment because everybody wants a return from everything that they spend for. So endowment is brought into the market because of that reason only. Third is ULIP product. ULIP is actually it's not a bad policy as such because if we know how to uh, take how to understand ULIP policy, that then it is one of the good products uh, to basically cover ourselves as well as take exposure towards equity market. But then the problem is first one should be covered in a term life insurance, which is basically it starts at the age of 20, where a person steps into the into the employment, and he is into the employment till the age of 60. So after covering himself in the term life insurance for adequate value, and if at all he has some considerable amount of savings also, then he can probably explore other options, which can be an options to explore, but not an option to consider as a necessity. So term life insurance is the only necessity here, and other products can be considered as a options to explore if he has adequate money where he can diversify his investments. So as we discussed in the previous slides, is basically traditional insurance policies which are not a term insurance policies and that can cost 10 times more than pure term insurance policies. So how much that can this really cost is basically on an average, the premiums of these policies can cost really somewhere between 1.5 to 2 lakh per year, whereas a term insurance costs somewhere between 15 to 20,000 for a 30-year-old person. Again, it's very subjective. It's very again it's a very customized product where a 40-year-old person wants to take term insurance, then the premiums will be slightly higher because of his age and because of his family history of medical illness and his lifestyle and all that. And but in general, pure term insurance are way cheaper, or it's one tenth of what we pay for traditional life insurance policies. So that's all about the term life insurance policies. But there are certain options you can look at when you buy a term insurance policies. So there are like three options, which is limited pay option, regular pay, and return of premium. Limited pay option is basically it is not generally recommended, but say if someone is able to afford it, then it can be taken. So which is say for example, I take a policy for next 30 years, then I don't have to pay premium for next 30 years. I can choose to pay it for only 10 years or 15 years or even 5 years. It's as per my choice, it's as per my decision. But only thing is that, or only suggestion is that that higher premium, because since you're paying it only for limited years, say 5 years or 10 years, the premium can be considerably higher because we are choosing to pay for limited years. So only thing is that higher premium should not erode our or should not bring a financial crunch at the present moment. Second is regular pay option, which is the most recommended because say a person takes for 30 years, he can pay premium for 30 years because all those 30 years he is going to work only. So regular pay is one of the good options and it is the most recommended option as it's very cheaper. It's not even 1%, it's only 0.1% of your total life cover. Say somebody takes a 1 crore cover, 1% is 1 lakh, whereas 10,000 is 0.1%. So 10,000 is the premium somebody is going to pay annually. So it's 0.1%, and that's the affordable cost for a 1 crore cover, and that's what regular pay generally offers. Third is return of premium option. Return of premium option, again, it's something like a endowment plan only, but which is also brought into the term life insurance concept. So that means that, say for example, I take for 30 years. If that unfortunate event that then doesn't happen, then uh, at my at the age of 61, I do not get anything from my term insurance policy because I'm surviving that period. So many people will not be very comfortable with this option because they ask the question that I'm paying for this money. I'm paying every year 10,000 or 15,000 or 20,000 for that matter, but I'm not getting anything out of this policy if I outlive the period, if I survive. So which is not a great thing to look at. That shouldn't be a thought process, but at least to ease the process, the life insurance has brought this concept called return of premium, where they return the premium at the end of the maturity or say at the 60th year, saying that at least, okay, you've survived, so we are giving back your premium. And in this case, since they're giving back the premiums are higher. That's the first drawback. Second drawback is that the money that you pay today is the money you'll be getting after 30 years. So basically, you're losing out on so many values. So your money that time your money will be nothing. So imagine 30,000 today and 30,000 after 30 years. So that is the problem with this return of premium option. So that's about the uh, term life insurance and varieties of life insurance products. So now over to Ashna to guide about the checklist in insurance.
Thank you, Swagat. So let's look into the checklist to select an insurance provider. So now assume that you are ready to take an insurance, and you have a lot of providers out there in private providers out there. So what are we? Yes. So we need to look on these ratios when come to selecting an insurance provider. So first comes credibility. So credibility is just how long the insurance company has been in the market and what is its reputation. So then comes the claim settlement ratio, which we all are familiar with while going for term policies. Basically, it is the percent of claims that is settled by insurer against the total claims received in a year. So basically, a higher claim settlement ratio shows that there are fewer disputes in the claim settlement process. So persistency ratio is the third one. So that is ratio of the policy holders that have renewed their policies with the same insurer. So this means that the customers are sticking with that insurer for a longer period, right? So what does it means? It means that the provider has credibility. Basically, you can say it is also financial, the provider can be reliable and a trustworthy person. So that we can be able to assess with the help of persistency ratio. And the last one is solvency ratio. So this is an indicator of the financial health of the insurance company. So the financial situation of the company is basically determined by its ability to pay its clients. So we need to look on all these four ratios before deciding an insurance provider. So we also look into the claim settlement process, claim settlement ratio of a particular provider when we are going to take a policy on them. So next comes the checklist to buy your insurance policy. So first thing, how much insurance do you need? This is the first and foremost question that comes to our mind. How much I need? So here I'm going to explain a concept called HLV, human life value. So basically, HLV is a financial worth of individual's life. And it quantifies the economic value of a person, of an individual's life, and it gives you a value that you are going to contribute to the dependents and their family members in in the absence of you. So we need to look at the HLV, wherein HLV, as Swagat already pointed out, we need to look into a lot of features, factors before we are going to take an insurance. For example, how much debt you have currently, what is your current annual income, how much expenses you are making annually for the family, for the household, and your retirement age and your dependents. That mean in case of a term policy, your spouse, life expectancy. All this needs to be considered before come up to a value of how much insurance do you need. So for that, you have HLV, human life value. And I would like to ask Swagat to put more points in HLV, about HLV.
Sure, I'll share. So HLV is basically it's called human life value. Hope I'm audible. HLV is the human life value. So that's the explanation, and it basically entails certain details. For example, uh, the person's gross annual income, his expenses for the family, and then the number of years he's going to work, be in employment, or the number of years he's going to contribute to the family, and then his asset value. And assets basically can be his mutual funds value, PF value, and then equity shares value, and then it can be FD value. And then more importantly, it can be any property value. Say, for example, I have a property of 1 crore. That is also something that I can consider because upon my demise, that is something my family can rely on, at least for their sustenance. So these are the values that will stay even if I'm not there. And then more importantly, the age you are looking to provide your family. So after giving all these details, there'll be a sum value, say 1.5 or 2 crore, or even 3 crore, 4 crore for that matter. That's called human life value. So 4 crore in this case means that that is the value I'm supposed to insure myself under the term life insurance option, so that upon my demise, my family will have this 4 crore, which will help them run the family. And running the family can have many components, like managing the family, providing for children education, providing for children's marriage, and then even taking the amount for retirement, their retirement purpose. So that is the uh, explanation for human life value. Yeah. You can take a Archana. Yeah.
Yeah. So next thing we have to look at is your policy cost effective? So that is a question. So basically, your annual premium should be less than 1% of your sum assured or the cover. So maybe it should range between 0.2% or 0.5% of the total sum assured. So that's the way you can assess that your policy is cost effective or not once you know about the premium of the policy. And there comes the third one. The third point is, what does your policy not cover, which is very important to know about the exclusions before buying the policy. So we can say that in drunken drive is not covered in both health and life, and pregnancy related ailments are generally not covered. And when it comes to claim, then only we got to know when the claim gets rejected, then only we get to know about the exclusions of the policy, which should not be the case. We always have to check before you buy an insurance policy. We need to look upon what your policy does not cover. So if you take in case of critical illness, we can say that adventurous sports are not covered, and then events like war and natural calamities, which results in large number of demise. So these are all not covered in a term policy. So we need to know the exclusions, and we need to know how much insurance we need, and we should know that whether the premium we are going to pay is really worth it or not while coming to buy a insurance policy. So hope we have shed a light on an important topic, the need of the hour. And so basically, we want you to say that you can always, you have a lot of investment options, but insurance should not be considered as an investment option. And take the policy not because that your friends are referring, that the individual agents are coming behind you, and these are all not should be the reason that you are taking a policy. You should take the policy that best fit for you, basically. So it comes with like when you go to an insurance advisor or insurance specialist, they will be able to provide you a customized solutions. So you should you well use that and get get your financial future safe. So over to the audience. If you have any questions, you can give it in Q&A. Okay, Tamarai ma'am have asked that for term insurance, physical medical test is mandatory or telephonic video call is enough for medical test, or it's based on the age they will decide. Swagat, you can answer this.
Okay, the first question. Yes, so medical test is very subjective, ma'am, because it depends on the value of the coverage. It depends on how much your years you're going to cover yourself, and then it also depends on your family history. So, and to be more precise, say any coverage beyond one crore, and especially after COVID days. So they are asking for a medical test. So first it goes like this: we fill up the proposal form, make the premium payment, and then there comes the next step, which is they call us to check about our health condition. So that's called telemedicals. And if telemedical goes fine, they some companies or sometimes even they issue the policy. But if they see something, you know, or if they feel that medical test needs to be taken, then they ask us to take a medical test. And even the medical test goes in two ways, which is a home visit medical test and then a center visit medical test. So it basically, as you asked, it depends on the age, that is one, and it depends on the coverage that you take. And more importantly, it is also about the medical declaration that we are giving. So again, declaration is something that's very important. Disclosing all the facts is very important. And listening on the medical test, we'll have all these features coming up. Second is which add-on we can or must need to consider when taking the term life plan. So you can consider taking a critical illness plan, critical illness policy with the term life insurance, because this is something, as I told you, it covers many chronic illnesses. First thing. Secondly, while taking it with the term insurance, it comes to the advantage that the premiums are fixed. Say, for example, today you take it, the premiums are for 9,000, and even after 25 years, the premium still remains at the same 9,000. That's one good option to go for. And secondly, you can consider taking a personal accident disability rider. If it is available with the insurer, you can consider that. So that is also, but more importantly, critical illness rider is what is really important. So additionally, you can consider taking a personal accident rider with the term life insurance. Third is for to increase the term life sum assured in future, whether they need to take additional term policy or existing policy. So additional, so maximum you can increase it. Say for example, you take a 1 crore cover, you can maximum increase it by another 50 lakh. Say you get married, and then additionally by another 25% if you have a child. So these two are the only options available. But then say today, considering your human life value and considering your income and expenses and all that, today your human life value comes to 1 crore, you can take 1 crore cover. But after 5 years, say you have huge responsibility, you have some liabilities and all that, then and your definitely your salary and your expenses, everything would have increased. And that time, if the term insurance comes to 3 crore, then you can't add it in a existing cover. You can take a new cover for the true value. And here comes the concept of diversifying. It's good to diversify also, because having with two companies also makes sense, because then your risk is, you're basically not only taking insurance to mitigate the risk, but then you're also transferring the risk between two insurance. So that's also one step that you can do. And many people have this question that if at all I take two term insurance coverage, will that be okay? Will the insurer approve my claim? Yes, it will be approved as long as we are able to provide proper income proofs while taking the policy, as long as we are able to declare about the first insurance policy that we have taken already, the second policy, then yes, you can have multiple insurance coverages, and then all that can be claimed by the family. And then for this, just assuming that one have taken a term life policy in India, suppose if that also in India, whether the insurance process the claim or the insurance check the claim. The insurance will definitely process the claim because this term insurance is basically it's a global coverage. So it doesn't matter where you travel after taking the policy. Just that, and it's not mandated by IRDA or anybody that you have to tell the insurance company that you're traveling or you're becoming an addict after some time. But it is good to tell the inform the insurance company about your traveling, and it is good to basically keep the insurance company updated. But it's a worldwide coverage, and there is no way they can reject the claim. They can approve the claim because it is also something that's been done by the insurance company. Yeah.
Okay, the second question is evaluate the cost effectiveness of the insurance. Could you please repeat? I didn't get. So cost effectiveness is basically, as I said, you can check whether your policy, the premium you are paying is effective or not. So that can be assessed based on three things. So that is basically the first one is when you So when you know that your annual premium should be less than 1% of your sum assured or your cover. So it should range between 0.2% or 0.5%. So when you're paying a premium, which is a lot more expensive, then you should definitely need to look at whether you have appropriate insurance policy or not. So basically it all depends on the premium you are paying. With varying features you are paying a higher premium, that is different. But at a very young age you are paying a lot of premium, and that insurance is also kind using for investment purpose like ULIP policies or endowment, then we need to look into the cost effectiveness of the insurance.
Hi, sorry, I think there was my audio was not clear, I guess. So I'll just repeat what I said earlier. So the first question is, yes, medical test will be required, but it also depends, as in certain cases, it basically depends on the coverage we take. And secondly, it depends on in which age we apply. And thirdly, it also depends on the medical history that we declare in the proposal form. So basically, there will be a telemedical, that's the first stage. And then if required, the insurance company will ask us to take a medical test, physical medical test. And physical medical test is of two types, which is a home visit where the people will come home, take the samples. And second is the center visit where you will have to take a treadmill test as well. So it entirely depends, it's very subjective, but also it also depends on your age, the amount you take, because beyond 1 crore, yes, these days a medical test is required. So that's the thing. And more importantly, the medical details that you declare. Second is which add-on can we add while taking the term life policy. very important question, and you can add critical illness rider to your policy while taking the term insurance. And the advantage is that, as I told, critical is something which includes a list of chronic illnesses, and the more advantage part is that, so say for example, if you take a 25 lakh critical illness coverage, then the premium is around 9,000 for example, then that 9,000 will remain same for next 30 years or till the time you take the critical illness policy. And this is applicable only when you take it with the term insurance. So the critical illness policy also becomes cheaper when you take it with the term insurance. So it's a very important thing that you can also consider taking a critical illness coverage with the term insurance. And if at all there is this personal accident policy or a personal accident disability policy where you have the option to cover that also, you can take that also with the term insurance, because there are like generally 3 to 4 types of disabilities which can also be covered with the term insurance. So these are two add-ons you can consider taking. Third is regarding increasing the value. It is better to take two separate coverages. For example, today your human life value is 1 crore, but after 2-3 years, because of your increase in salary, because of your responsibility towards the family, if everything goes up, then and that time during that time your human life value comes to 3 crore, then it is better to take additional 2 crores. And that's how you can actually do it. So many people can have a question that, can I have multiple term insurance coverages? And will the insurance company, all the insurance company will approve my claim? Yes, you can have multiple insurance coverages, and as long as you're able to declare that, and as long as you're able to provide proper income proofs, because as I told you, income is the main factor when it comes to term insurance. It is aligned to your income. Say, for example, my annual income is only 10 lakh. I can't take a 10 crore coverage. The maximum I can take is between 1.5 to 2.5 crore. For example, I'm saying. So it is very much aligned to your income, because term insurance has a checkpoint that you can't over insure yourself. So if you require additional coverage, then with existing coverage, you can't do. The maximum you can do is another 50 lakh to 1 crore. That's the limit you have. But for any additional human life value between today and say 5 years down the line, you can take a new term insurance, and you can have a number of term insurances as long as you're eligible. And there is this fourth question that says, can I, after taking term insurance, can I travel outside India? Will the insurance company approve my claim if I died there? Yes, it will approve claim, because there is no condition that today you're a resident Indian and tomorrow you can't be a non-resident Indian. You can be, and even you don't have to declare, or you don't have to, as per IRDA, you don't have to tell the insurance company that you become an NRI. But just to be clear on our side, we can declare, or you can basically update the insurance company by sending a mail that, yes, today while taking the policy I was resident Indian, but today I'm an NRI, and that's enough. So, and if at all some unfortunate event happens, then yes, the insurance company will definitely approve the claim. There is no restriction on that. Next is, do you have any Excel template to calculate the term insurance amount? Archana, can you take this?
Sure. So, yeah, we do have a template to calculate the term insurance amount, to calculate HLV basically. So what we have come up with for the audience, I am just pasting a Google spreadsheet, a form in the chat. So you can just go through it and you can just fill in the form and then submit it, and we will be getting to you with your appropriate HLV value. So please feel free to use this calculator. So you can just give your values, and we will be working on it, and we will be sharing you the appropriate human life value or the term insurance amount that you need to take.
Next is, I'm a salaried and I'm thinking of taking term insurance for 80 years. Should I take it for 80 or 60? Can it be for 60 years? Uh, yes, it basically it is ideal to stop it at 60, or there is no number as such, but it differs basically. So for a salaried person, it can stop at 60 or 55. It depends on
his retirement age, his or her retirement age. But for a self-employed or for a business person, it can go up to 70 or 80 years. So it really depends on what kind of employment you're in or what type of income you earn. But then, as I said, ideally, it is to stop uh, once you stop your employment, or it is basically to decide your retirement age at the moment. So it's not going to be like you have to decide it now itself, but then at least you will have a vague or a say some idea of when you want to retire, or you can have a tentative idea. Say, for example, many people take 2 to 3 term insurance policies. So, say, for example, I want to take at today's value, I want to take 1 crore term insurance. Then I can, and I'm not sure of my retirement age, then I can take it till 60 or 65. And say 2, 3 years down the line, I'm sure that I want to retire at 55. Then I can take the second coverage for 55 alone. So it's very basically we have to come up with a retirement age, and with that we can decide till when we can take. And taking it till 80 is not a wrong option, but then the idea is that you will shell out a lot of amount as premium, so you'll pay a lot of money as premium. Instead, if you can take the plan as at till 60, and if you can invest or save the difference between taking at 80 and taking till 60, right? So there'll be some amount. If you can keep saving that for, say, again the 30 or 40 years, that will itself be a good corpus which you can basically make use of. So the whole point of taking the term insurance is to make sure you have coverage, and if something happens, that coverage goes to the family. And again, not as an investment point, because many of our thought process are such that at least if I take it till 85 or 99, then there is some amount that goes to the family. Again, that is not a bad option, but the ideal option is to take till retirement. That's a point. Yeah, because you'll be paying a lot of premium. You'll be paying a very higher premium. For example, to say my term insurance premium is 30,000 for a normal policy, and if I'm choosing to take till 85, then I'll be paying as double as what I'm paying for a normal policy, close to 55, 60,000, even 65,000. So, which is not a very ideal thing to do. But if at all we are able to afford that, if at all we are in the comfortable space, even after paying that amount, then yes, it's our discretion. It's up to us. Yeah. Next question is, NRE need any mandatory insurance policy when we are in other country? So yes, there is one mandatory policy that you can take, which is a travel insurance. Travel insurance, as I told you, is nothing but it's a international health insurance or health insurance outside of India, because health insurance will cover only in India in many policies. At least 95% of the policies in India covers only in when you're in India. So for you to travel, or for you to have a coverage outside of India, then travel insurance is the best policy to have. And you can basically plan your dates. You can basically plan your value that you want to take. And once you're back in India, that coverage will stop. So that's one thing. Second, for example, say if in case of NRI, and what they can do is, while they come down to India, they can take a term insurance policy. They can take the details of income which they're earning in that country, and they can take a term insurance here, because the premiums in India are cheaper. So you can take a term insurance here, and you can go back to the same country where you're working. And in case of any claim, the family can take the help of the insurance company or the insurance advisor to get a claim. So term insurance is one thing that I would suggest. That's very important. And then travel insurance if you're a resident Indian and traveling across globe. Next question is, when choosing sum assured for term insurance, how do we calculate? Based on living expenses plus inflation, or based on current salary? So it's basically both. It's basically living expenses plus inflation and your current salary. That is so basically the current salary is to take the present term insurance, but then in future your salary will change, right? So then you can take additional term insurance. But as you mentioned correctly, it's basically both, based on living expenses plus inflation. It's both only. Okay, so when we are traveling through trains, we are paying a meager amount of, say, some 70 paise. How does it work? I understand it's a part of travel insurance. Even in Ola, we have some sort of insurance cover and all. Okay, this is a very different question, but again, say for example, insurance works in the concept of, say, proportion or probability, if I'm not wrong. So which means that say out of 1,000 people traveling in train or even 1,000 people taking Ola, not okay. I'll first finish off this Ola concept and then I'll come to train. So which is basically say 1,000 people are traveling a day. Not everybody meets with accident. So which means that say if I pay $70 paise for my travel for my insurance, then again all the 1,000 people will pay, right? So not all the 1,000 people will meet with accident. So it's basically collection of or accumulation of that amount and paying it to one person. That's the concept. And again, there is one more point that what it covers. It's basically a personal accident policy, and it's not a very wide coverage and all. It's basically going to cover for the hospital expenses first thing, and in case of something else like a disability happens, then a 1 lakh or 2 lakh comes to the person to handle expenses for a while. So that's about Ola. And then travel insurance. Again, travel insurance in train, especially the point of train had come up. So which means that again, not every day we hear the news of train getting derailing or getting into accident and all that. So out of 1,500 or 2,000 passengers who are traveling in train, right? It's and say 50% of the people enroll for that, and assume that not every train that gets into accident. So out of 100 train or even one out of 500 trains, 1 or 2 trains meet with accident, right? So it's basically accumulation of all that, and paying it to the people who have enrolled for that when they meet with accident. That's the point. Again, what it covers is it covers for the personal accident, and I think the coverage is close to 10 lakh. So they pay for disability, and what type of disability it covers is permanent disability, which means that loss of 2 major organs, and it also means that I'm not in a position to employ or work, or I'm dependent on somebody. I'm not independent. I'm not able to do anything on myself about myself, or I'm not able to help myself. So that's the concept of personal disability. I'm sorry, permanent disability, which is loss of 2 major organs, and I'm not able to help myself on my own. So that's the coverage they're trying to provide. In case of death or disability happens, they pay 10 lakh, around 10 lakh, if I'm not wrong. Uh, Next question is, I'm looking for health insurance. Will you be able to guide or suggest the suitable one currently living in UAE? Sure, sir, we can help. Just that what we can do is we'll share our mail ID in the chat, and you can, below, or you can also give your mail ID. We can get in touch, sir. So, because there are certain details I would like to get from you, and that will be helpful, in suggesting you right health insurance. It's pretty neat process for choosing the term insurance, but on the other hand, it's very difficult to choose the medical insurance. Can you briefly give 5 or 6 basic points to check while choosing the medical insurance? Sure. The first is again, I want to segregate it in 2 ways. First is if you're senior citizens, then there are like many points you have to check. First is to see what is the entry and exit, or what is the entry age restriction you have in that medical policy. Say beyond 61, there are some companies they don't allow you to take medical tests. I'm sorry, medical insurance, and there are some companies which has restriction after 61, and there comes a concept of co-payment. After 61, there are some companies which puts a condition that you have to pay 10% of your as co-pay henceforth. So which means that in say for example, in each and every claim after taking the health insurance, I have to bear 10% of the claim if I take it post 61 years. So which means that today my bill is 1 lakh, I'll have to bear first 10,000. And tomorrow after 6 months, I go for another claim, my bill is 5 lakh, then I have to bear first 50,000. And then it's so on. So it's a lifelong process. So for a senior citizen, they have to be very much aware that if they have any co-payment in the policy. Second is there are like many sublimits. Again, for senior citizen, they have to check if because since they're senior citizens, they might have got exposed to certain illnesses or certain surgeries for that matter. And if they're declaring it, then the health insurance will put some conditions like sublimits. For example, say I have diabetes, I'm a senior citizen, and I take the policy. For diabetes, I not be given the full claim. That's first condition. Second is that they also say that I might have I might have to wait for 3 years, which is basically pre-existing waiting period. So as a senior citizen, you have to check if the policy has co-payment, pre-existing waiting period, and how long is the waiting period. Definitely all policies have pre-existing waiting period, but how long is the waiting period? And after waiting period, are they going to cover you 100%? So these three are the main 3 points I would say a senior citizen is supposed to look at. And yes, as I told you, sublimits or capping. For each and every feature, there might be capping. There might be, say, for example, cataract, they can say only per eye, they can cover only 20,000 or 30,000. So these conditions are there in some of the public limited companies like uh, National Insurance or Oriental or New India Insurance, some companies like that. So we have to be very careful, especially when we take it through a banker, right? Because you're a customer, you've been a loyal customer for like 30 years or 25 years. They'll say that, sir, we can offer you this insurance, which is with this company, and you can, for a cheaper premium, you can take up to 5 lakh or 10 lakh. So you have to be very careful. We have to read the terms and conditions. We have to, even if we don't know, we can at least approach a nearby insurance advisor or someone and take a full clarity before you apply. Because the problem is, after taking the policy, they say that they won't cover this, or they say they will cover only half of the expenses, and the rest of the half has to be covered by you only, has to be paid by you only. So as I told you, first thing is pre-existing waiting period, co-payment, and then cappings. So, and for a normal person who's not a senior citizen, there is no restriction as such, or there is no checklist as such. But you can see some of the features, like there is something called no claim bonus that you can look at, where they give you bonus if you don't claim. And there is something called restoration benefit, where in case if I have exhausted 5 lakh, then another 5 lakh will be given to me. It will be restored. So some companies will give only for different illness, whereas some company gives for same and different illness. So the concept behind same and different illness is that once I've used the first 5 lakh, I can't use it for the same 5 lakh which I previously used. So that's the concept of different illness, whereas same illness will cover. I can use it for same illness as well as different illness. Just that I have to make sure that the first 5 lakh is exhausted. Only then I use the second 5 lakh, and I keep the insurance company informed. So, and there is this ambulance benefit you can look at, and some people do not prefer allopathic treatment. They can look at the options of Ayush, which is Ayurveda, Unani, Siddha, homeopathy. So those options they can look at. And as main point to look at is when you approach a health insurance company, ask for the list of hospitals they have. Especially, it is better to just go through the list of hospitals in your locality, because not all of us plan our hospitalization, and most of the cases it's emergency case only. So the problem is because of some emergency we go to some hospital which cannot be, or which is say not in the list of hospitals the insurance company has tied up. Then the cases is basically not entertained there, and we'll have to pay from our pocket and then take reimbursement. And reimbursement is a very tedious process, because you have to have all the bills original. It has to be right from day one, and there are the process goes back and forth many times, and then after 90 days only, it's basically a process of 45 to 90 days, and after 90 days only you can expect your policy or the claim to come. So it's better to look at your your list of hospitals in your locality and be aware, so that even in case of emergency, at least you have one hospital that pops up in your mind during emergency. That's going to be very helpful. Yeah, and can you set up one more session for medical insurance? Sure, sir. We'll do that, because we since this is the first time after a long time, this is the first time we are doing this in this platform. Yeah, we have plans to continue this, and definitely we'll do one on health insurance, and we would like to definitely go in detail about the features. Since one more person also asked like 5 to 6 basic points to check in health insurance, definitely we'll do. We will definitely break each and every point. We'll tell you what is advantage in that point, what is disadvantage, what are the other things you can look at, or what are the exclusions you can look at. We can discuss that. We are planning to set up one more or even more on health insurance. Yeah. Why physical challenge person unable to take health and term insurance even though very good salary? Okay, so this is because it's also very I'm very sorry about that, sir, but it's also very subjective case, because it also depends on which what kind of disability that person has. And taking a term insurance will not be a challenge, because term insurance company, they only disability is not a problem there. Definitely you can have that person can have a disability problem, but then they can take a term insurance coverage. But health insurance slightly becomes a challenge, because again, there are like many conditions for that person, because they first thing, they won't cover for that disability, where for that person it can be a recurring expense, or or depending on the disability, if the person do not have mobility, then they won't give a health insurance, because the expense or other illness that's causing out of this can be a problem. So again, as I said, it's very subjective case, but I can definitely get in touch with you, and we can discuss this, sir. Which are the companies I thought plan recommends? Uh, to answer this question, we don't recommend any plans in term insurance. Just that we are recommending you to take a term insurance. That's the whole point of this webinar. We are recommending you to take a term insurance. That's the thing. So we don't recommend any plan as such. But then, if you have any, if you have somebody from the insurance background, that will be a lot helpful. And then, or if you're able to, cover through all the checklists which Archana had suggested. For example, the solvency ratio, persistency ratio, claim settlement ratio, all that, and how long have the insurance company been in the market. If all that are, if we are able to crack all that, and if we're able to come up with 2-3 companies, then yes, you can definitely get a good, and then you are in a good hands only, sir. So that's the only thing. But as long as term insurance is considered, the features and everything remain same only. It doesn't matter where you take it. Just that, as I told you, if you have someone from that background who can help you while you are at your own work and things, then that's what is recommendable. I would say. But when it comes to health insurance, again, it depends. Basically, health insurance is a lot different from term insurance. So for health insurance, what we recommend is, again, we are going by feature only. Any company that does not have co-payment or cappings or room rent restriction, all that, then yes, you can go through that product, sir. And if you have further queries on that, then we can get in touch with you. Anyway, we have left our number here, and even our mail IDs, so you can definitely get in touch with us and we can discuss further. Second is, NRI can take term insurance policy while living in abroad. Yes, sir, yes, NRIs can take term insurance, just that they have to be present in India while taking the policy because of this medical test. That's the only point. And yeah, they can travel anywhere, and because of their employment or even for studying, taking a sabbatical, it doesn't matter. It's just that while taking term insurance, they have to be present in India at least for 2 to 3 weeks, so that they complete all the process and then they can leave abroad. Yeah, and as I told you, as I addressed in the previous point, claim is not a problem, because that's why they are allowing NRIs to take policy. So claim will definitely not be a problem, and there is no requirement that the person has to be India, or at least the family has to be India to take the claim. They can apply from there itself, and the claim will still be approved. Whether farmers can apply to take term insurance? Yes, so farmers actually come under, sometimes they come under a self-employed category. So what they can do is, there is a requirement that if the person is self-employed, then the income requirement has to be more than 10 lakhs. So that's the requirement. If that requirement is met, then they can take a term insurance. That's the first thing. Second thing is that Yeah. Oh, yeah. So for second point is that they don't have to be. So basically, as I told you, they should have filed the idea for at least last 3 years. And because of, again, there are like many, you have many subsidies, or you have many relaxations in income tax while you file, especially when you're a farmer. But then if you're able to show the income limit as is specified, then yes, you can take. If not, then you have many insurance policies which is offered by the government, which you can consider taking. But to take a normal term insurance from a private company or even from a public limited company, then this is the requirement. So you want to take this point?
Yeah. College going student can take term or complete the degree and get income to take term. So that's the question. So it's very basic to understand that term insurance is for they definitely need income to take a term insurance. So as I said earlier, term insurance is basically for the breadwinner or who is taking care of the financial responsibilities of the family. So they need to have term insurance. In case of the policyholder demise, the family will get the corpus. So that is the basic of term insurance. So yes, in this case, college going student cannot take term because you need to show that you are earning income. So that you have to give pay slips and income tax computation statement, all that to take a term insurance. So in that case, college going student will not be eligible to take a term.
Can a retired person take a term? Suppose person took early retirement at the age of 40. Yes, you can take term even at the age of 40. Say you're retiring at 40, but then after 41, you feel you have a requirement to take a term insurance, you can take it. Just that you have to fulfill the requirement of having a employment that time. So at 41, you have a different employment, or say after 40, or let's take a case where you took early retirement and you still have the urge to work more, or you have a motive to start your own business, and then if business is doing good, then yes, at the age of 42 or 43, you can take a term insurance. Just that you have to have the uh, requirement of having a payslip or even bank statement for 6 months where your income is showing there, or ITR for the last 2 3 years, so that for rest of the period you can consider yourself employed or working, and then you can take a term insurance. So that's the requirement. So you need to have an income proof. That's the requirement, and the income proof can be ITR filing, or it can be pay slips, or it can be bank statement which has your salary credit, or your income credit. So that's the requirement, and if you're still working that time, then yes, you can take it that time. So you can take, even you can take your term insurance at the age of 59 or even 60, but not after 60. So because in India, or it is generally formed that with the concept that after 60 nobody is going to start their employment. So the entry age is restricted there. But at 59, yes, if somebody wants to take, the premium will be very higher. But if it really solves the purpose of taking it, then yes, they can take it. And if a person has accumulated enough wealth and she is not doing anything, yes. So again, yeah, thanks for the point. Say at the age of 40 itself, taking yourself as an example here, at the age of 40, you decided to take yourself a retirement, and then you feel that you have enough wealth so that uh, your children are not dependent, or even you can provide your family for the rest of the time, or until your children becomes independent and they start providing to the family. Then yes, if you have adequate income or wealth, then you don't have to have a term insurance. Say, for example, if somebody's human life value is with income, expense, and all that is coming to 2.5 or 3 crores, and they already have a property of 2 crore or something, or other assets, something like they have equity shares, dividend income, as you mentioned, or MF, mutual funds, or PF. All that, if they have adequately done, or even if they have some forefathers, ancestral property, and all that, and if they feel that it is adequate for the family to sustain, even in their absence, the family can sustain. If they feel that, then yes, they're adequately there, and they don't have to take a term insurance. So term insurance is something. I'll tell you one more case where a person of 28 years and his annual income is 20 lakhs, for example. But if he doesn't have any dependents, if his parents are not dependent on his income, say they're already retired and they have their retirement money coming, pension coming, and they're not, they're not basically relying on his income, and he is not spending anything on his family, then he doesn't have to take term insurance, because although he is earning, he has income and all that, there is no loss to the family because of his absence. So he doesn't have to take any term insurance. Only there is someone who's relying on him, on his expenses or on his income to support the family, then only then he should take a term insurance. So that's the concept. Yeah. Any other questions you have? From your experience, which health insurance is providing without copay? It's too confusing to choose the right policy. Actually, co-payment comes only, especially it is available, or it is put on somebody who's after the who's basically senior citizen. That's when the co-payment point comes. So anybody who's not a senior citizen can take a policy without co-payment. So that's one thing. But when somebody is a senior citizen and still does not have a health insurance, then there are many policies, there are many private players, and to quote some okay, I'm quoting one or two companies which you can probably go through, but for more detail you have to get in touch with us, and that will be more appropriate, because we'll be able to provide you more details, we'll be able to guide you in that. So the companies are basically ICC Lombard do not have any co-payment. Royal Sundaram do not have any co-payment. Even Tata does not have any co-payment. So these are some policies you can explore. But still, if you have some more, if still you're confused, you can definitely approach us. We'll be able to help you. In medical insurance, every year there is no claim. Sum assured only getting year on increase 100% max. Other than any other benefit is there. Yes, sir. So there are like 2 to 3 benefits which basically increases, or which goes beyond your sum insured. Say for example, your sum insured is 5 lakh. We can start from there. Your 5 lakh, and say in your policy the no claim bonus is 50%. Then the first year you're not claiming, then the policy becomes 7.5 upon renewal. So basically 5 lakh, and then 50% of the 5 lakh, which is 2.5 lakh. So put together, it becomes 7.5 lakh during renewal. This is the case of first year. And in second year, again, you're not claiming. And then upon renewal, that 7.5 lakhs becomes 10 lakhs. Because again, the 50% from the sum insured. So basically, you have a policy worth of 5 lakh plus 5 lakh of no claim bonus. But the problem is that no claim bonus keeps shuffling back and forth. If you're claiming, then it goes back to 5 lakh, and then if you're not claiming, it again comes back to 10 lakh. So it keeps shuffling back and forth. So that's one way of, or that's one area where you get an increment in your sum insured. Second area is something that's a very different area, which is called restoration benefit. As I told you, say I have 5 lakh coverage and I claim during that year. I have exhausted the full 5 lakh with different claims. Say, for example, I have taken a claim for my illness, and then my wife, and then my children, and all that. Then I'll be restored with another 5 lakh. And it is basically some companies are giving for 100%, and some companies are giving up to 300% or 400%, or even unlimited restoration benefit they provide. Which means that within that year, I can basically use it for many times. many 5 lakh I can basically claim from that one policy itself for that 1 year itself, right? And it comes with a restriction that only some companies provide it for same and different illness. To give you an example, same illness means, say for example, first time I claimed it in the first year, I would have claimed it for dengue or malaria. But in the second year, I'm sorry, but in the second claim, it some company will not appreciate if I claim it for same malaria. So they will only approve if I claim it for some other illness. So there are that restrictions are there. So same illness and different illness, again, that point plays a big role. But there are certain areas like no claim bonus and restoration benefit, which acts beyond your sum insured. Please explain about taking a taking loan against endowment plans. So that's not generally appreciated, sir. That's basically the problem is that endowment policies itself is not that great because you're paying a lot of premium, and on top of it, if somebody is taking a loan against it, if somebody is taking a loan against it, then the problem becomes that, okay, this is the area where I'm not fully educated about. But then the basic problem that I understand is if somebody takes a loan, then, and if something happens, say, for example, the value of the policy is 10 lakhs and the value of the loan that they have taken is close to 8 lakhs. And upon some unfortunate event, the family only gets 2 lakh. And this loan purpose, we might not know what purpose they have taken for. So my exposure towards this area is little low, but I can check and get back out to you on this. Nowadays, there are separate policy for cancer treatment. Is it necessary to take a separate policy for cancer treatment? Instead, the existing health insurance won't cover cancer treatment as well. So the existing insurance covers cancer treatment, but after a certain point, it won't cover, or the cover might not be fully adequate. Say, for example, for cancer treatment, if somebody requires 20 lakh, and if I have only a coverage of 7.5 or 10 lakh, the policy can support me until that. Right, but beyond that, it won't cover. So, taking a cancer treatment might make sense if somebody has a history of cancer in their family. But in normal family or from a normal background, if somebody who has this confusion, then what they can do is instead of taking just a cancer cover, they can take a critical illness cover as such. So that they're not only exposed to this, or they're not only they do get the benefit of cancer treatment, but also they do get the treatment for other illnesses as well by getting lump sum payout in case of any diagnosis. So yes, you can look at taking a cancer cover, but instead go for a critical illness cover so that you have a variety of or list of illnesses which you can cover yourself for. So that's the one thing. And as I told you, if the health insurance is of lesser value, then beyond a point that won't support. So this criticalness comes handy because we get a lump sum payout and we can use it for multiple purpose. Like you can use it as we can use it for income replacement if somebody is not employed because of the critical illness, or they can basically use it for treatment itself because they would have gone past the coverage of the health insurance. Just a curiosity, can we lock the health insurance premium amount for entire life, like the term life plan? No, we can't do that actually, unfortunately, because with the rising medical inflation, every 5 years, the health insurance company keeps increasing the premium only as we age. But there are again, there are some companies which keeps increasing every year also, like 2% or 3%, and there are some companies which keeps increasing every 5 years once. So till there is no solution for that, and the premium increases at every frequent interval. So that's how it's been designed, and that's how it is. So there is no solution yet for that. Critical illness can be taken separately or together with other term or any other policy. Yes, you can take it separately and you can take it term insurance also. So as I told you earlier, when you take it with the term insurance, the advantage is that the premiums are locked basically, and it stays same for the rest of 25 or 30 years. That's one big advantage. But the critical illness while taking with term insurance covers only the major stage of illnesses. For example, let's take the case of cancer. Cancer stage 3 is considered to be a critical or chronic stage. cancer 1 and stage 1 and stage 2 are still cancer only, but then stage 3 is considered to be a critical stage, and that's when the term insurance, pitches in or comes in to cover. So that's when we receive the payout. So that's why they lock the premium, and the premiums are affordable. On contrary, there are like separate critical illness policy which you can take, which covers right from the stage 1 itself, but then the premium increases in every 5 years, and the increase in premium is actually very significant. And what you can do is, if you're confused whether to take it with term insurance or whether to take it with as a separate policy, you can do combination of both. So say you want to take a 50 lakhs critical illness coverage, 75% of the value can be taken with term insurance, and 25% of the value can be taken with as a say separate policy, so that you don't lose out on premium so much. At the same time, you get the benefit both in major stages as well as minor stages. So that's the solution. Yeah. So any more questions? We are coming to the end of session. So if you have any more questions, please do put here. And for further queries, say if you're not able to ask, or if you don't have any questions, you can reach out on the number that we have provided here, and definitely we'll guide you on the right steps. iThought has any plan where we can invest lump sum and the annual income can be paid for term policy like a combo? No, sir, we don't have anything. Just that we're also we are tied up with some companies to provide advice and service, but we cannot because we don't have the authority to come up with any new products. Only the or new way of like a combo. We can't create anything. Just that we can guide you on probably planning things, and that you can take it up from there. So but we can't come up with we don't have the authority to come up with anything new as such. So thanks for the question, but we don't have that sort of an authority to do. Thanks a lot, sir.
Yeah, thanks a lot, everyone. So hope all your queries are cleared, and if you have any more queries, you can always reach out to us on the mail ID and the number mentioned in the chat box.
And thanks a lot, all of you, for attending this session. And I hope myself and Archana we were able to provide some guidance, some lights on all of these areas. And we are planning to, yes, as you asked, we are planning to do more session at least once in every month. And we are planning to tell us what we know, and hoping to guide you in the right direction. So expecting all of you to attend the next sessions as well. So provide us support. You can ask us as many doubts you have. You can reach out on the number. You can mail us. You can, we'll be definitely conducting a separate session on health insurance. We'll be going in detail. We are planning to do a separate session on term insurance as well, to tell the idea like why it is better than, although we have told you, vocally, like why it is better than other compared to other products. We can show some numbers as to why it is good, and what else you can do, and what are the areas where you can explore in term insurance, what are the other insurances that can secure you from all the damages and everything. So we'll definitely be interested, and we would definitely expect all of you to attend that and support us during the session. Thanks a lot.
Thanks a lot.